Prashant, at the beginning of the year, your portfolio positioning was tilted towards value. It is still tilted towards value. And there were two arguments. One, value stocks had underperformed, they were cheap, and the mean would revert. And second, we are at the beginning of the economic cycle. Value stocks have come back. Now, what is in store for utilities or corporate banks, or for that matter, PSU stocks? Do you think that mean reversion in terms of the underperformance is over?
I mean, honestly, I don't know. And I was in a way surprised by the valuations where some of these companies were trading. But I think we have seen reasonable correction in the corporate banks, reasonable correction in valuations. I think the next leg of corrections in banks in general and the some of the banks which are still cheaper compared to their peers. I think the important thing to watch out there would be the credit growth. This is one indicator in India which continues to remain quite low. The credit growth, I think last data point was around 7%. And as economy normalizes, as capex, industrial capex, infra capex picks up steam, as retail credit comes back to normalcy, I think the credit growth should pick up, and that I think will be supportive of good prospects for the banking sector. The I think the only other piece where there is really good value, or where there is good value, as you pointed out, is the utility space. And or let me put it, sectors that have been impacted by ESG concerns. Views on this may vary from individual to individual, but clearly this is what has impacted the valuations, whether it is the power producers or whether it is the tobacco companies. I think I think this should probably be short-lived. That's what I have felt for some time. Thus far, it has not played out, and I think time is the best judge of how long these low valuations can remain. But I, for one, believe that the current thermal power producers are extremely well placed to transition to the renewable power. They will play a very meaningful role because in renewable power, the main competitive advantage or disadvantage is the cost of borrowing. Some of these companies, the large companies, have the finest cost of borrowing. So over time, I don't see any reason why they will not become more ESG compliant or acceptable to a wider set of investors. And meanwhile, the power demand in India continues to grow. I'm sure we all read the headlines about the challenges in the coal space, the power space we had a few quarters back. I think one big question with not just India, but probably the world will seek an answer to over time is whether the ESG concerns will impact demand first or will they impact supply first. If you look at the global context, the investments into the oil and gas space have been quite low compared to where they used to be. And the population of fossil fuel vehicles will continue to grow for the next at least 5 years and probably the next 10 years, uh, despite good EV adoption. If you have not been investing enough in fossil fuels for last 3 5 years because of obvious reasons, and demand holds up or actually grows, then what happens to oil prices? What happens to the price of power? I think is an issue which is very interesting, and I will be keenly watching this space over the next few